There's a general consensus in the United States, in some circles, that we probably have avoided a recession for the near future. We're going to have a so-called soft landing. That's the consensus. Is that your view as well?
I think it's really hard to predict. I do think the economy is weakening. We're seeing, evidence of that in some of our companies. You're seeing, and I have some concerns. There's been a huge subsidy in terms of low interest rates, and most companies fix their rates or their debt at very low rates, and certainly real estate investors did the same. And that works until it doesn't work. And so I think what's going to be interesting is to see what happens when people have to reprice their debt. And I think that can have sort of a cliff-like effect. And you're certainly seeing that in real estate.
Now, the markets are assuming, and the markets are not always right, but the markets are assuming that there's going to be a Fed discount cut sometime next year. And as we talk now, just about the end of November, it's not clear what the Fed will do, but some people say that the Fed, if they were to cut interest rates next year, would help the Democrats and therefore be seen as very political. On the other hand, some people say the Fed can't wait till after the election because the economy might need a stimulus. So you have a view on what the Fed's likely to do?
I think they're going to cut rates, and I think they're going to cut rates sooner than people expect, because what's happening is the real rate of interest, ultimately, which is what impacts the economy, keeps increasing as inflation declines, right? So if the Fed keeps rates in the sort of middle fives, and inflation is trending below 3%, or that's a very high real rate of interest, and I think that is having a sort of retarding effect on the economy. And then, of course, again, many businesses and certainly many individuals have the benefit of fixed rate debt, and that fixed rate debt, certainly for companies and for commercial real estate, starts to roll off. So I think there's a risk of a hard landing if the Fed doesn't start cutting rates, pretty soon. So I think the market expects sometime middle of next year. I think it's more likely probably as early as Q1.
By its own admission, the Fed probably missed inflation initially. They said it was transitory, but they played catch up and they've increased rates considerably since that time. Do you think the Fed made a mistake in not handling inflation differently in the beginning? And how do you think they've done since they started increasing interest rates?
They certainly made a mistake. I mean, I think that the Fed generally as an institution would admit that. I think that they caught up effectively, so you give them credit for acknowledging the mistake and being pretty aggressive. And then I think you want to make sure that they're Chairman Powell's desire not to have a legacy of causing or contributing to long-term inflation doesn't cause them to make the opposite mistake, i.e. keep rates too high for too long. And I think the market expectation is, called middle of next year, July, something like this, for the beginnings of easing. I think the economy will likely demand an earlier move. And I don't think of the Fed or at least this Fed, as a particularly political institution. I think they're really trying to do the right thing.